In fact, the entire Amtek group is in focus. All of them have reported good numbers, though there is an interest cost element which is higher for all of them. Let's discuss the details of Amtek Auto and the other group companies with John Flintham, Senior Managing Director and CEO of Amtek Auto. Good morning, Mr. Flintham. Thank you very much for joining us. Well, actually, let me start with that. Across your group and in Amtek Auto, excellent top-line growth, 25% or thereabouts, but net profit is flat to lower. For you, it is lower in Amtek Auto. In Amtek India as well, net profit is lower by about 8%, as well in Ahmednagar Forgings. It's a muted profit growth. And the only element that stands out as an issue is interest costs up across the board. What led to this higher interest cost? Is it all the acquisitions? And will we see that coming down?
Yes, I think you need to look behind the figures a little bit in terms of the PAT figures. There is a change of reporting that we've actually gone ahead with the new Companies Act. So that's a one-off adjustment which you'll see. And also we've got some one-off deal costs for the acquisition. So it's not as clean as what you're talking about there. When you strip them out, it's still pretty healthy.
What was the one-off deal cost that you've incurred this quarter?
They were the deal costs for the acquisitions overseas.
Yes. Could you quantify the amount?
We'll come out with that later when we do our earnings analysis. I think what we really want to focus on is a tremendous top line, which I think underlines the strategy of the last 18 months, and we're now starting to see the full benefit of the acquisitions with a 38% growth in top line. Margins are still holding very firm due to manufacturing programs we're developing across the whole group with Lean Six Sigma and lean manufacturing, which is underpinning the margins. And obviously the growth across all the units is quite good.
No taking away from that, Mr. Flintham, just wanted to get that interest cost number out of the way. Yes, it's a healthy growth in margins across the group and in Amtek Auto as well, a 200 basis point jump in EBITDA margins as well as a 25% growth in total income. Is this maintainable? What is the sense you are getting with the performance in the current quarter and what you see in terms of order book? Will this be the run rate that we should expect?
Yeah, and I think we've got two or three things coming through. Last year was a record new order intake for the group with over 10,000 Kroll new orders, which I reported at the last earnings call. The momentum is carried on into this quarter. Another 2,600 Kroll of new business won in this quarter, which is encouraging. Obviously, the market is mixed. Obviously passenger cars starting to improve slightly, but we are heavily, our major customer is Maruti Suzuki, and they are still very strong in the Indian market. Overseas we're very strong with people like VW, who are doing quite well in Germany, and exports are doing well out of Germany. And obviously with Jaguar Land Rover in our UK facilities, they're still doing extremely well. So I think there's pockets of good news there. Obviously, there's some downsides. Our Brazilian business is struggling because of the economy in Brazil. And some of the more southern European countries are lagging behind a little bit.
Okay. You've reported for Numia Tech for an improvement in margins from 6 to 11%. Is that right? Is there scope for more?
Yeah, actually, the overseas business in total, now we've restructured all of our businesses overseas is under now our international holdings company in Singapore. That business reported 10-11% EBITDA margin, which is a very healthy margin. I think underpins the restructuring we did both in Numia Tech but also we're now nearly completing our restructuring in the Cooper organisation, which we also purchased last year. With both of these now, the synergy plans are now well on the way between India and overseas.
Okay. You know, Mr. Flintham, what your shareholders want to know is that you've got 4 companies in total. Do you have any plans at all of consolidating these businesses?
I mean, obviously, there's a lot of talk, and we have discussed what we should be doing in the medium to long term. We haven't ruled anything out. There's no formal discussions and decisions. In the board meeting yesterday, we did take an approval from the board for the finance committee to investigate the possibility of reducing our holdings in some of the subsidiaries, which will obviously then allow us to look at a debt reduction plan, which was always part of our strategy from the last 2 or 3 quarters.
So which of these subsidiaries?
We've got obviously the ones you've talked about with Amtek India, Amtek Forge, JMT. We hold a healthy, substantial amount of equity in those companies, and we're looking to see whether maybe we should reduce that and raise some capital to reduce debt.
Okay. Is there any debt reduction target? It's 15,000 crores, right?
Yes, we've always said our net debt to EBITDA should be below sort of 2.5 to 3. It's currently running at 4.5-ish. And we have plans in place over the next 18 months to achieve that target. And this is just one of the options we're looking at.
But you will still look out for acquisitions?
I think we're always on the lookout. If you look at our growth story and our successful track record of acquisitions, yes, we would look at underperforming assets, whether they're in India or abroad, and look seriously. We never overpay for any businesses, which is a strength of Amtek's. And we've had a successful track record of turning businesses around. So, yeah, we continue to look, yes.
How soon is the Finance Committee going to explore the option or, come out with an answer about reducing your stake in subsidiaries in order to raise some money by which you can pay down your debt? Any timeline?
The board yesterday approved the Finance Committee to investigate the options and report back to the board. So the next board meeting is in 3 months' time. So hopefully in that time the committee will have come up with some options for us to discuss.
Okay. Give us a feel of how the demand situation is. We don't get a very positive sense from the local, from the domestic auto markets. There seems to be a downturn in the two-wheeler market after a decent showing last quarter or last year. Not decent, just better than expected. What is the sense you are getting? Is the domestic auto market showing signs of recovery, or is it still very, very placid?
I think there's green shoots of recovery in a number of areas. Obviously, last quarter was slightly disappointing. If you take areas like tractor market, the tractor industry was significantly lower last quarter. But we're expecting that to pick up from the middle of this year, I think. Passenger cars, I think we're still expecting, although it's running at, say, 2 to 3% on a year-on-year improvement in the last quarter. I would expect that to be more like 5 to 6% as we go through the year. Interest rates have been reduced. There is a thought maybe some more interest rates will come along. And all these are good signs in terms of passenger cars, and in particular two-wheelers. Two-wheelers are very dependent on this, on the interest levels.
Okay.
So I think we will see a slight improvement as we go through this year.
Okay. Well, finally, Mr. Flintham, before we let you go, give us some number to cling to in terms of, say, over a 24-month period, what kind of top-line growth we can expect, and what level of margins we can reasonably price in, 31, 32%?
If you look, I will look at our consolidated margins. Actually, okay. If you look at our consolidated margins, we're at 21, 22%. We're annualizing sales at around 19,000 crores. I would be disappointed if we didn't reach 23,000 crores very, very soon. And our intention always is to hold our consolidated margins. So that gives you an outline of where we're looking for in the next coming months.
Fair point. Mr. Flintham, pleasure speaking with you. Thank you very much for giving us all those details and a business outlook as well.